Everybody, welcome to the technical analysis webinar with AvaTrade. My name is Troy. I'm a senior account manager with the company. I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that no one trade is guaranteed to profit. There's risk with each and every trade you take. So in one way or another, you should manage that risk in a way that makes sense for you with a combination of proper trade sizes, maybe stop loss settings. You might also make use of some special risk management tools that are available on our web trader and AvaTrade Go platform, which we'll look at soon. Also keep in mind that what we cover is meant as an educational adventure and not to be taken as financial advisement. Okay, so what is technical analysis? To put it simply, looking back at the historical movements, usually on candlestick charts, to analyze the price movements, to look for repetitive patterns that hopefully lend some predictability to future price movements. That's the idea of technical analysis. While historical movements and patterns are no guarantee of future movements and patterns, they do lend some helpful insight into what you might think will happen moving forward. And many traders have very successful trading strategies using technical analysis as a strong part of the strategy. And so we'll go over some of those ideas today. I tend to like to match up the technicals with the fundamentals and try and make sure that you're following technical strategies that are going with the wind, so to speak, rather than against the wind in terms of the fundamental headwinds. And so we'll take a quick peek at the fundamentals. We'll get into the technical analysis and strategies, and we'll make use of the tools that I mentioned that are available on AvaTrade Go and our web trader to look at the technical analysis that's coming in to use proper risk management, etc. Now, we tend to lean on manual methods of technical analysis in the webinars, and that's because it makes you actually have to understand the technical analysis rather than relying on an indicator just to tell you when something is overbought or oversold. You have to learn it and understand it when we use manual methods, but there's nothing wrong with also adding an indicator or two to your chart to help confirm what you think is happening. And so that's available as well. To use indicators on our platform and app. Now, any questions that you have, any input that you want to share, please do so as we go along in the chat box. I'm happy to address any questions or share any pertinent info. One thing I like to do is project our AvaTrade Go mobile app on the screen. We'll do that as soon as we get a feel for the fundamental headwinds. And so let's first look at the headlines, and then we'll jump into looking at the app and then the web trader platform for our technical analysis. So we see today some really negative numbers came in out of Great Britain. GDP numbers missing the mark year over year, missing the mark quarter over quarter. Somewhat of an anemic 1.3% GDP growth. Usually anything under 2 or 3% is considered pretty low. We're looking at 1.3%, which is lower than the 1.5 that was already a low expectation. So GDP growth not looking good in Great Britain. At least they don't have inflation concerns in that regard, but the GDP numbers missing the mark altogether. Industrial production also missing the mark. and on and on. It's just a slew of red announcements, including trade balance as well, being worse than expected. So an onslaught of negative numbers coming in out of Great Britain earlier today. We'll look at the pound, and you'll see movements accordingly have occurred with that bad news that came in. So that's something to keep in mind as we look at GBP pairings. And if we look at yesterday, we'll see a slew of positive numbers in terms of US announcements. Core CPI, that's consumer pricing index, higher than expected, which means there's a lot of demand in the economy. People are spending money. Consumer prices are rising faster than expected. And usually that's viewed as good news, right? That's why it's listed in green here, representing better than expected. In quotation marks, I say better than expected, because right now, the fact that the economy is growing so fast in the US is raising concerns of hyperinflation. Gas prices, grocery prices, housing prices, car prices, etc., growing faster than many people are comfortable with. And so these positive numbers actually were viewed as negative yesterday, and the US dollar rapidly strengthened. The markets pulled down, and even oil pulled down as the U.S. dollar strengthened, with fear that usually when there's higher inflation than expected, as these numbers showed, usually that causes a currency to weaken and the markets to rise with happiness. And actually what happened was the fear that the higher the inflation numbers are, the more likely the U.S. is to cut the stimulus measures, cut the bond buying program that they've been talking about tapering. And so the opposite reaction occurred, as you might expect under normal circumstances. Really good numbers came in, and that fueled fear instead of optimism. And so there was a bit of a sell-off in the markets, fear of tapering of the stimulus measures, and down went the markets, down went crude oil, etc. And the U.S. dollar strengthened to multi-month highs. Now, that was yesterday. And then we come into today, and we looked a lot of bad numbers coming out of Great Britain. So then we go to some headlines. This is out of Reuters. Sluggish UK economy falls behind the G7 pack. Again, we already know that, looking at those numbers that came in today. There's a headline that confirms it. Dollar soars to 16-month high after U.S. inflation surge. Okay, we understand that's from yesterday's numbers, showing high inflation, consumer pricing index higher than the already high expectations, prices rising faster than folks are comfortable with. That creates inflation fears, which usually would weaken a currency, but because it's combined with fears that stimulus measures will be taken away to slow the inflation down, the U.S. dollar strengthened and fear hit the markets. Okay, that's in a nutshell. That's what happened there. High inflation numbers, which normally would weaken a currency, actually are causing the currency to strengthen because of a fear of what the Feds will do in the U.S. with the stimulus measures, i.e., cut them back because inflation's too high. And real quick, if we look down here, we see volatility today is the opposite of yesterday. There's a rebound occurring. The VIX volatility index is down, meaning fear is down today, and markets are green on the futures market. The US 30 futures, US 500 futures are in the green. The opposite from yesterday. Yesterday, the futures were in the red and volatility was up. Now volatility is down and the futures are in the green. So the one thing that's held strong is the US dollar has strengthened a bit even further. But some of that fear is waning and the markets look to be turning green so far today. Okay, the flip side of yesterday. So with that understanding, then we go in to say, okay, we should do our technical analysis then. We understand there's some bearishness that brought the pound down. We understand there's some fear that has kind of disappeared, allowing maybe the markets to be climbing back up right now. Maybe crude oil is climbing back up right now. That's what the fundamentals are telling us right now. And we understand there's still fear about inflation. So maybe there's reason for the US dollar to weaken again as the fear has disappeared. Maybe the US dollar weakens with those inflationary fears. Okay, the initial knee-jerk reaction fear has kind of waned. The VIX index is the fear index is down. Markets are green on the futures, and so we might expect the U.S. dollar to weaken back some then with that type of fundamental setup, and especially when there's fears that were really about inflation, which is something that should actually weaken the U.S. dollar. Then it might be an opportunity technically to look for spots where the U.S. dollar is strong and high and might pull back against currencies like the euro, or we might steer clear of the pound because of all the bad news. But maybe some other major currencies could strengthen back against the USD today. So we have that in mind as we start our technical analysis. Now, what I'd like to do is expand my phone screen and share this with you. And what we're looking at then is the AvaTrade Go mobile app. And if you haven't gotten it on your mobile device, I would say do so. Let's take a look at some features that might help us out. All right. Since we're talking about technical analysis, if I tap on the bar in the lower, the 3 bars in the lower right, then I can scroll down and look for some of the Trading Central advanced features, which is Market Buzz, Forex featured ideas, analyst views. So I'm going to click on analyst views because I know that's giving me free technical analysis signals, okay, coming straight from the experts at Trading Central. So this has a combination of cryptocurrency and standard currency pairings for you to choose from. And so maybe we look for something that's related to what we talked about already. The dollar index would make sense. Maybe we could find out the dollar index at a high point that we could expect it to drop down from, or the USD Canadian might make sense. And let's talk a little bit about why the USD Canadian might be something that's interesting to look at. And we went over this before. USD Canadian, if the US dollar has been climbing, and you see the most recent signal says it expects further climbing of the USD Canadian, if oil rebounds, which it has started to do a little bit of a rebound, if the high demand that's been on oil with the supply pressures that have been there, that's been driving the price of crude oil up, if crude oil rises back up today, we could see an actual strengthening of the Canadian dollar in response to that, because the number one GDP factor for the Canadian economy is exporting crude oil. So if crude oil prices rise back up, that tends to have a strengthening effect on the Canadian dollar. Okay, so we've got the initial signal here is going with the fact that the US dollar's been strengthening. Okay, and we see the initial signal says that it's expecting a breakout upward. We see the arrow here. Okay, and so if we look down here, we see it says our preferences, long positions above 124.70 with targets at 125.50 and 125.70 in extension. So if the price crosses 124.70, they're saying buy. So you could have a pending order to buy from around 124.70, and the target, meaning the take profit, could be up about 80 pips around 125.50. Okay, and anywhere up to 125.70, that's where the resistance, they draw the resistance lines up here. If you go across on larger candles, you'll see some resistance at those levels. Now the opposite, they suggest, the alternative scenario, okay, if the price drops below 124.70, look for further downside with 124.50 and 124.30 as targets. So a good 20 to 40 pips down as a target if you think it's going to drop below 124.70. Okay, and the signal goes on to list your support, your resistance levels, and the last one that it crossed at the time of the signal. Okay, so what we could do, and I think we'll do that on the full screen when we get on the web trader, we'll take a look at the USD Canadian and we'll see what's going on and analyze the fact that the signal is telling us that initially there could be a breakout upward, but we'll take a look at potential opportunities for the downside with the understanding that there's been a lot of pressure on crude oil prices to rise. When I say pressure, I mean pressure upward because of supply problems and the economy demand for oil growing faster than the increase in supply. Okay, And OPEC's not in a big hurry, they say, to increase the amount of increase of production that they're doing of crude oil. They kind of like the higher prices. If you're selling something and the price is high, you kind of like that. So you'll be careful about increasing the supply too fast because you kind of want the price up if you're OPEC, right? Everybody else, obviously, you don't want the price up as you're filling your gas tank up or trying to heat your home with different forms of energy that have been rising with the increased demand and limited supply increases. So, yeah, thanks, Pablo. You're saying the price is at 125.64 now, right? So it's already, that signal is shown to already have been correct then, right? It crossed 124.70 and it's almost 100 pips above. And you see, that's where you can start to look at, say, okay, the initial preference was right on the signal, and then you could say, well, what's the next thing I want to do then? All right, and so you can look through those technical analysis signals on the app, on the web trader. They're there for you. It breaks down the price levels, and just as I read through, you don't have to agree with their preference or their downside direction, right? Their backup direction. You could look at it and say, you know what, based on the fundamentals that I understand, I prefer not their preferred direction, but their secondary direction. And maybe you set up in the secondary direction from that signal because you're putting the information together. You're looking at the fundamentals, you're looking at the breakdown of the price levels. Doesn't mean you have to interpret the price levels the same. The price levels are there. They're drawn for you, support, resistance, where the breakout moves could be, and then you make a decision which way you prefer to trade in the end. So signals are not meant necessarily to tell you for sure you should trade in this direction. And you see within the signal, it even gives you an alternative price level, support, resistance, in case you think things will go the other way. Okay, so it's more of an art than a science as you start to get into reading signals and deciding, okay, what's my preferred direction now that the signal gives me the price level information and the and I understand the breakout moves that could occur at specific price levels and support and resistance is broken down for me in the signal. Now I get to make the decision in the end. And you know, that signal maybe didn't read all the most recent headlines that we just looked at, right? It's more of a technical analysis signal than a fundamental consideration. All right, so what other features can we look at here quick on the app? If I'm looking for fundamental news, I can go to something like Market Buzz. And as I tap on Market Buzz, I can look at news coming in about our stocks. And right away, just as earlier in the week, what's trending huge are Tesla and Amazon. And you see there are over 500 articles on Tesla, over 400 on Amazon that have come in recently. And if you want to look at those articles and read them, you tap on the particular stock. It gives you some general information about how people feel about the stock. Why do people think it will rise even up to 19%? It's listing here because it dropped so much recently after Elon Musk tweeted that he's selling a huge chunk of his own stock. And so a knee-jerk drop gives potential rise. And then you see the articles are all listed down here, and you can search. There's a search feature at the top here where you can search. Just tap the little search tool, and you can search up here for any company that you want to pull up articles. So if I want Amazon, I can type Amazon. Funny, I was trying to type it on my computer keyboard, and I'm looking dumbfounded for a second. I have to use my phone. And so now it searched for Amazon, and the numbers changed, may rise 11.3%. That would be huge, right? 11.3% rise. And you go down and you can find things that are affecting Amazon. Look, you start to see supply chain issues, exposed loopholes, Black Friday gaming, all of that relates to Amazon, those articles. Black Friday, the biggest online sales day of the year, right? Supply chain issues. There are worries about what might happen to Amazon stock value because of the supply chain issues that are occurring in the ports and all across different countries. In the US, they have a huge trucking problem, and in other areas, a shortage of truckers and on and on. And so coming out of the pandemic, maybe the normal Christmas, rush that usually drives Amazon value up could actually cause a crisis that could drop the stock. So these are articles you can read about and understand what's going on. Tap on the article and it opens it for you. Okay. So very awesome features in both our mobile app and the web trader that can help you with your decisions on fundamental and technical analysis. So if we see there's articles about supply chain problems, etc., when we tap on the Amazon stock in the app or on the web trader, then maybe we understand if we read those articles why there could be some negative sentiment moving into Christmas season with a company like Amazon. Okay, and so and earlier we saw the article about 50,000 shares of Amazon being sold by similar to what Elon Musk did with Tesla, and so we can get a heads up as to what preference we might have as we start to look at the technical analysis. So let's bring up USD Canadian, Amazon, and Tesla on the full screen on the web trader instead of the app, and take a look at what do we think based on the fundamentals that we're looking at. What do we think might happen? And I'm just going to close the screen sharing on my phone. And if you log in here from our main website, and I can do that now on my test account, then you're in our web trader. And you may need to refresh your screen when you first log in just to get the data flowing, and there it is. Okay, I've got the Australian Canadian showing. Let's go to USD Canadian and we'll take a look. Let me just take a quick pause and just ask you to type okay if everybody's with me, or maybe type a question if you have one before we get moving on the web trader for some of these technical analysis strategies. Okay, great. Looks like everyone's okay thus far. If anyone has questions, please feel free to type them. Okay, and let me minimize this. See, I've got some open positions running that are doing decent. 3 out of 4 trades are in the money. This is from the last webinar. We did some pending orders. You see, we were buying on Tesla after the big dip. We sold on Amazon because of all the talk about supply chain problems. And so exactly what we already said we wanted to look at, these two, they're in the money from Tuesday with that exact thought that we already knew fundamentally Tuesday. And then we looked at the technicals and we said, okay, maybe we buy on Tesla because it had a knee-jerk drop when Elon Musk talked about selling a huge chunk of shares. But Tesla is still a strong company. There was no fundamental reason why it should drop other than a tweet from Elon. So we bought on Tesla and we're up in the money. And maybe we say, okay, let's close this position. No problem. Market's closed. Can't close these positions. The U.S. stocks you can't close until the U.S. market's open. So when the U.S. market opens, I can take a look. Maybe these move further into the money. Maybe they pull back, and then I just want to leave them open. It's up to me what I want to do. Once the U.S. market opens for Tesla and Amazon, gold, these are currently moving. So you say, why do we have 2 trades going here? Well, we took a move selling on gold, and we backed it up with a buy position. And this is a really cool way to set things up. If you understand, we have AvaProtect available on gold, silver, and FX pairings. You see the protection feature here. If I open this up, you'll see that all that negative floating, it'll be added back when the protection ends. I actually could close it now and it'll add that 661.79 back into my account. And I traded in the opposite direction without paying for protection. I had a pending order in case gold went up and broke the resistance level we identified. Then I got in on the buy and I was covered on my risk using AvaProtect on my market sell. So I took a market move, put the protection on it, so I'm covered, and backed it up with a position in the opposite direction in case it reversed and went the wrong way. And that's exactly what happened. So I can go and look at this position. I still have protection for another 3 hours and 34 minutes. Okay. If I wanted to close the position, I could do so. Okay. Profit negative 667.39. You see that's protected. So I can close the position if I want. I just got a payment from AvaProtect into my account. You see my available balance just jumped up by a nice chunk. And now I've got the gold position that was making money still running. If I wanted to close that, I just made an overall profit because my protection cost less than what I made in the opposite direction, and all my loss on the other trade was covered. And so if I wanted to close my gold, I just did that and took another nice profit. Okay. And so now I just need to wait and look at Tesla and Amazon. So some unique risk management features that I promised I would show you when you use the web trader in AvaTrade Go. So let's take a look then, USD Canadian, and I could go to my favorites and see, do I have USD Canadian here? I can add it. If I don't, easy search tool. Okay, so now I've got USD Canadian. If I want it in my favorites list, I just click the star, and then it'll be in my favorites list when I click there. Okay, let's take a look then at USD Canadian on the full screen here. I tend to like to do my technical analysis on the full screen. The app is great for managing my trades and all of that. The technical analysis can be done on the phone. I've done it before in the webinars to show it. But we all have our preferences. I like the full screen. The web trader is amazing to do our technical analysis on. So we've got USD Canadian up here on the 1 minute candles, still trying to climb some. But we understand the USD, while it was strengthening today, it wasn't strengthening at the pace it was yesterday. We understand the fear is down today and the market's actually starting to rebound. So USD tends to strengthen when there's economic fear and weaken back down when there's not. So we look at, say, 1 hour candles. We start to look off and say, okay, is there any resistance over here? I don't see any. So then we take a larger view, taking kind of an inside out view. Let's go to 4 hour candles. And now I start to see over here, there is resistance. You see this old support level here, support, support, and then it broke and that became resistance here. And down it went. So now we come up and we're testing this old support level to see if we can break through. And if it does, then the next resistance is here. Okay. And we can start to draw these lines if we want and say, okay, I see a resistance up here. If this move breaks clearly through this old support, and it actually looks like it got above it. Okay, do you see that? This was the old support and resistance, and you see the candle here is above that. So it's already broken this resistance, and the next resistance is up here. So it looks like a buy position, a market buy with your stop loss below this support level would make sense. Okay, if it breaks back below the support, then it was a false breakthrough and you could think about selling. Okay, that's if you think the USD should keep climbing. I don't feel that this is a strong breakthrough of the resistance yet. Still trying to climb above this area. And you see a wick where it's actually starting to push back down. So if you're going to short this with the fact that maybe fear is dying off today and oil was pushing up, which could strengthen the Canadian, then you could say, okay, to get above this resistance, I don't have to go far, just up here. If it breaks that far clear of this resistance, then you say, okay, it's off and running maybe to the next level. So if we come back in then, say 15-minute candles, then we see this line we drew. This was the resistance, and it's having trouble staying above it. You see the wick here, back down. Here, back down. It's having trouble breaking this resistance and staying above it. You see the wicks, okay? So if you say, okay, technically speaking, it's an opportunistic spot to short this, and all I would need to do is get my stop loss above these wicks. And if it breaks past these wicks, then maybe I say, okay, then I believe it's dropping, right? And so I could then say, USD Canadian. Let me go market sell. You could put AvaProtect on this, by the way, if you wish. Protect by the hour, by the day. Okay, it doesn't cost much to have protection. And just as I showed you with that gold move, I had hundreds of dollars added back on the move that lost from the protection. And I don't remember how much the protection cost me, maybe $100, $120. And I got a lot more than that added back from the protection. And then the trade that I traded in the opposite direction was winning. So overall, I made a nice profit. So AvaProtect is an option. Obviously, you can program your take profit and stop losses. And so if I'm selling here, and let's say I want to do, I don't know, a quarter of a lot. All right. And I say I want my take profit 50 pips down. And so I look at the current price and say, okay, I would like my my stop loss. Let's put stop loss 10 pips or 15 pips, maybe the other direction. So 1.2561. Okay, so stop loss is up. Oh no, I'm on the pending order. Sorry, stop loss down here 1.2595. Okay, and so right away it tells me how much I'm risking in my account currency, calculated automatically in the order window. This is another part of the risk management that I said these platforms help you with. As you're doing your technical analysis, you know you have a resistance that maybe is 5 pips tested up. If I put my stop loss 15 pips up, I'm clear of that resistance level. If it breaks up to that level, then I say, okay, it truly broke the resistance, and I'll admit that my sell position's wrong, and it'll hit my stop loss, and I only lose, in this case, $64 now, because it's going the right way. It's dropping while I'm talking. So my stop loss just got a little further away. And then if I come here for my take profit, I can also pick a price. Okay, maybe 125. Whoops. Got to get my decimal in there. Take profit. Okay, so I put it at 125 even. And I see, well, okay, that's a nice ratio. My potential profit's about double what I'm risking. And maybe I say, you know what, I'm willing to risk more than 66. I'll risk 100. And so I increase the trade size here, and it's adjusting my risk. I can see what it is. And now I'm risking about 100 with 0.36 lot size. And then I sell. So now I know my exact risk to my stop loss. It's my stop loss is based on the technical analysis, getting it above the resistance into where I know if it breaks through, the next resistance level is quite a ways up. And so I would give up maybe on my sell if it clearly broke that resistance. Right now it's dropping off of the resistance, and I have my take profit down at 125 even. If I expand the chart, that's right down around. Let's draw the line. 124, 125. Even. Okay, that's right about there. And you see that's the support level. Okay, so this was old resistance, it broke through, became support. So if this is dropping, it might make sense to take profit as it reaches the support level. Okay, and maybe you adjust that a little and you say, you know what, I want to take profit just before the support level in case it's going to bounce. So maybe it'll bounce just before it hits the support and go back up. So maybe I say, you know what, I'll take my profit here. And you can see how the technical analysis is driving my exact take profit price. So 125.04 maybe makes more sense to me. Can I go modify that position? Of course I can. I can go to USD Canadian, click on the pencil, my stop loss, take profit, Now I see based on the technical analysis, I would prefer 125.04 as my take profit. I'm still making more than I'm risking, and I click update. And there we go. Okay, so very simple to use the features for your technical analysis, driving your entry price and exit price, and stop loss and take profit. Okay, so kind of an all-in-one thing here to manage your technical analysis and your fundamental analysis, etc. Any questions on that as we move to a different instrument? Just again, the fundamental thinking behind this move, and we see the technical analysis. It makes sense to sell from this resistance, and if it pulls down, great. If not, you see the strategy to get out of it as well. If it confirms a breakthrough of the resistance, the fundamentals behind that move also kind of makes sense. If we see oil bouncing back up today, if fear is dropping, which is what caused oil to come down, we see that the fear index, the volatility index, is down now. So maybe oil goes back up. In that case, USD would maybe weaken against the Canadian for fundamental reasons as well. So we've aligned our fundamentals and our technicals. All right, so let's go ahead then and take a look at another instrument. And I think it would be nice to go ahead and take a look at something like Amazon, since we talked about Amazon. Now, Amazon's not live to buy and sell on right now, but we can look at the chart. Remember, the US market's not open yet. So we'll look at the chart and see what's going on. No surprise, Amazon pushed down yesterday, was expected. We had talked about it in the prior session, and it came to fruition. And that was fundamentally driven with supply chain crisis, and also a tweet about 50,000 shares of Amazon being sold by Bezos, I believe. Now, we see Amazon has reached a support level. Okay, it dropped on the 2-hour candles. We see the drop, and we see at the end of the day, it stopped dropping right here. And there's no surprise that that's where it stopped dropping. Look across. This is a support level, an old resistance level. You see how great the technical analysis helps you predict, even in a plunging market like yesterday. Look how the technical analysis accurately picked where the plunge would stop, meaning where you should take your profit maybe if you were selling, right? The fundamentals told us sell. The technicals told us where to take our profit. So fundamentals, supply chain crisis, worries about inflation, on and on and on. Down goes the market, down goes Amazon specifically, which would be most largely affected by a supply chain crisis in terms of the online retailers. And you see the old resistance here, resistance, which became support back here, perfectly managed as support again here. All right. So now we're watching when the US market opens. If it plunges below the support, then that's a sign that it'll keep dropping, right? Potentially. But what we're looking at is probably an expectation that we could get a bounce back up with Amazon in terms of the fundamentals, right? Fear is down again today. The volatility index is down. If the US market opens and this is bouncing around on this support level, that might be an opportunity to try and go long on Amazon. If it doesn't break the support at the open, and if it hasn't already spiked all the way up here at the open, right? If it's bouncing around above the support, that could be an opportunity to go long on Amazon with a take profit up here near the resistance, near this high up here, as a scalp type move. Because it looks like a day where the markets have turned green in the futures. The volatility index is down. We already saw that. It looks like a day where we could have a little bounce back. No guarantee. So it would make sense if you did buy on this from above the support, that you put your stop loss somewhere that's reasonable for you risk-wise, somewhere below the support, so that if it does break the support, which is confirmation of a downtrend, then you get out, right? So you're using your technical analysis once the US market opens to say if it's above the support and you like the price, you could buy. technical analysis determining maybe a get out point for your take profit up here, and also technical analysis determining that your stop loss might be just below the support, that if it breaks the support, fear must be taking over again then maybe, and you get out with a very small loss. Okay, but you just have to look at where does the price open, because the price can gap at open. You see here this gap, it gapped down at open on this day, and here there was no gap. Where it closed the day before, it opened at the same price almost. We just don't know. If the price opens and it's down here, wow, that would be an opportunity to try and buy off the lower support. If it opened way down here, I would be looking to buy with a bounce maybe and stop loss below that support level. So it all depends, where does the price open? But you could use the same philosophy whether it opens here or if it gapped down and opened down here above a lower support. So there's just some ideas about what you could look to do with Amazon. And I know I keep leaning towards thinking there could be a bounce back up. You obviously, if this opens below the support, you could think the opposite and say, you know what, I'm going to sell. It gapped down and open, then that's a sign that maybe it'll drop further. And so keep that in mind as well. The technical setup could change based on where does that price open. If it opens below the support, that means it already broke below it. Maybe you sell and put your stop loss above. So you have to look at the technicals of where is the movement when the price opens today. Okay. Okay, I'm looking at 2-hour candles. Yes. How do you change the time frame? Right here. 2-hour candles. I can switch, scroll down, and I could go to 4-hour, 1 day, 1 week, one month even. Okay. And it's not a bad idea to look at multiple time frames, because this resistance and support, this price also could be confirmed as an important price level on larger candles. We could go to 1-day candles and see that, you know what, not only is that a support level from now, I could go back and say, wow, this was an important price level on the 1-day candles back weeks. Look at, it was resistance here on the 1-day candles. It's back here on the 1-day candles. You can see it was crisscrossing on this price way back here on the 1-day candles. So this price level, it's nothing new. When we look at 2-hour candles, that became a support level. Okay, it was an important price level going back weeks on the 1-day candles. So very good point about changing time frames and looking at the larger picture price levels as well, because that can confirm or discredit what you're thinking is an important price level. In this case, I think it confirms it as we go to the 1-day candles. Razwana, AvaProtect can be used on small accounts as well as large accounts, because based on the trade size, the cost of AvaProtect is less or more. So it's the same percent cost as you go smaller trades, bigger trades are almost the same. You'll see that the protection costs less. It's a smaller premium with smaller trades. So yeah, you can still use it with a smaller account. Keep in mind that AvaProtect is available on gold, silver, and FX pairings. Okay, and soon to be on some major indices, I believe. So keep an eye out for that. All right, very good questions. I think we'll stop here. If we had time, I would take a look at Tesla as well, but we'll see something similar. You could do the same strategy with Tesla. Okay, Tesla took a large drop for kind of a dumb reason. You know, Elon Musk selling some of his stock. That doesn't mean it's a weak company. So if Tesla's at a low point and you think, wow, this is an opportunity to buy on Tesla, if there's a nice support level, it could look like Amazon does here. If it broke a support level and you think it'll keep dropping, if that's what the technicals show you, then hey, take your shot. Okay, follow the technicals and also keep in mind the fundamental news. That's the idea here. I would say also take a look at oil. It's probably looking to bounce if it hasn't already, and maybe we'll look really quick at crude oil, and then we'll call it a day. I'll let you all go trade on some moves. Okay, crude oil, there's Brent crude, standard crude. Really, they move together, the prices on those. And so let me get rid of this. Let's expand the chart. You see crude oil dropped on the 1-minute candles. That doesn't mean much to me. Let's go to 2-hour. That's a little more significant. And we see, let's go to 4 hour. We see a bit of a support level in this area here. This is important to note, right there, okay? Where I drew this line, we've got resistance, it broke above and became support, and that support was confirmed 1, 2, 3, tested it and went right back up 4 times, and now look how close we are to that support level. And the fear is down today. We saw that. US dollar is not strengthening as rapidly as it did yesterday. We know that there's supply chain issues and inflationary worries that are driving up gasoline prices, oil prices. So you might trust this support level, not just because it looks like a nice support level on the 4 hour candles, but also because the fundamentals make sense that crude oil could go back up. Okay. And so if that's the case, then you can go out, you could quickly say, okay, buy on crude oil, let me do a market move. I can do take profit, stop loss at a spot that makes sense to me. Maybe I just say, you know what, I'll put my stop loss down 50 cents or $1. So I could go, let me click back off of that and I'll just change the 80 to 79. I'll go down $1 on my stop loss. I'm risking $57. If I think crude oil could go back up to near the recent highs, maybe I say 85 a barrel or 84 a barrel. And I say, wow, I could make about triple what I'm risking. And maybe I say again, maybe I'm willing to risk 100. So let me increase my trade size. And I say, okay, I'm risking 104. I could make 313. Done. I make my move. I understand the technicals behind it. I got a support level. It has to break it by about $1 for me to lose. And if I look at the bigger picture, let's go to 1 week candles. Let's go to 1 month candles. Okay. On the 1 month candles, I can draw a line at the top up here, and I can see, look, crude oil reached 85, almost 86 a barrel up here. Okay. We put our our take profit at 84. So that's right about there. So if crude oil is going to go back up, it doesn't even have to break the recent highs on the 1 month candles. Twice it went above 84 and hit 85, 86 type range. So if this is going to bounce back up, our take profit's at a spot, technically speaking, that makes sense. It doesn't even have to break to a new high and a new recent high, I should say. Certainly oil's been way above the 80s in the past, but it doesn't even have to break a recent high on the candles. And our stop loss is limited risk. We've got it below the 4 hour candle support level that we saw here. Okay, just below, down here. So nice technical move, and the fundamentals are behind it. All right, great. If any last questions, let me know. We're going to stop things here in a moment. Awanta, you're asking about different indicators. I addressed that issue at the beginning, that I tend to lean more on the manual technical analysis because you have to understand the price levels that way. If you want to add indicators, you go here, click on studies. We chose to call them studies instead of indicators, and they're all here. You can search by name or you can scroll through alphabetically. So you click on the one you want, like average true range. Okay. Double click and it moved it here, and then I can change the settings, and anything in this box when I click save will be added to the chart. There's my average true range indicator. So you can add any indicator very easily to the chart without any issues. Yes, you can watch this session. All of our webinars are recorded, and I would say by later today, certainly by tomorrow morning, it'll be uploaded to our YouTube channel. And you can find my webinars as well as other presenters on our YouTube channel. They're updated daily from all the live sessions. All right, everybody, thank you for joining. Good luck with your trading. And I'll see you. My next session is next Tuesday evening at 6 p.m. UK time. Bye for now. Good luck tonight.